Hi, everybody. This is Chris with Invest LYH. And today I wanted to go over a conversation that I had with a local investor here in Lynchburg about using economics in your real estate investment strategy. And I kind of want to go through some examples. So, the first thing I'm going to do is we're going to discuss the law of supply and the law of demand, right? D. I'm going to graph it to show you the graphics. I'm going to also show you what we call shifters. And then I'm going to look at some IRS data to basically take these and apply it to real world data. I'm going to introduce other data. And then we're going to look at opportunities. Okay. So let's start right out. We're going to talk about the law of supply. So the law of supply, what that states is that as price increases, you generally want to produce more. So you want to produce more. It's a direct relationship. Okay. The law of demand, on the other hand, think about our personal lives, right? As prices increase, are the amount that we want to consume decreases, or the quantity demanded goes down. If we have pens that are for 10 cents, we want to buy them. If they're for $10, we don't want to buy as many, right? That's the law of demand. So what does that look like graphically? How do we graph that? Well, we create a graph where we have price on one side and quantity on the other and zero at the axis, meaning price goes up. We know a certain, we know an indirect and a direct relationship. And as quantity goes up, we also have that same indirect relationship. What I mean is when we look at the law of supply, as price goes up, so we want to produce zero at zero price, but we want to produce many at higher prices. So we have a supply curve that goes like that. And then we want to consume a lot at a zero price, but we want to consume less quantity at a higher price. Okay. So we know that the demand curve downward shifts this way. And what we find in economics is that this equilibrium point is the point where the price and the quantity match up. So when we take a look at what we kind of talked about here, so far I've done these three items. Now we're going to talk about shifters. And what shifters do is sometimes these curves, excuse me, these supply and demand curves can shift from zero. So when there's, for example, Airbnb, right? You used to get a ton of profits on Airbnbs. A lot of people jumped into the Airbnb space. So there was a higher supply of Airbnb. So what happened is the Airbnb supply curve shifted from zero. And what happens is now, if we were to look at the price point for equilibrium, well, it drew all the way over to here. And what that means is that suppliers wanted to supply the same amount for the same price. Okay. But demand did not shift. So this area here, we'll do it in gold. Okay. We call that a surplus. And what happens is that puts downward pressure on the supply curve to meet demand so that the new equilibrium is down here at a lower price point, price 2, but at a higher quantity, quantity 2. This is sometimes in economics, we talk about how profit leads to efficiency, because what's happening is the demand curve didn't shift, but the number of people supplying the housing did. So we have that surplus, which puts downward pressure on the price, which creates a new price point. Now, the same can be true of the demand. So if we were to do another graph, price, quantity, zero, supply, demand, well, the demand can shift. This is what happened during kind of after the summer of 2020, right? Kind of during the 2020. People wanted to buy houses and the supply remained stable. It didn't move very much. Okay. So what we have is when we have this demand too, we had the same thing where if we looked at the price one for quantity one at the original point, well, now we had this many people who wanted, they wanted this many units of homes at the same prices. But what we had here was a shortage. Okay, this is a shortage. And what we have from that is that puts upward pressure on price to come back to equilibrium, which has a higher price point, price two, at a greater quantity two. So the area that we have from here to here is considered the shortage amount. So we talk about the shortage in homes. This is what we're talking about in economics. So I tell you all of this. This is Econ 101, okay? So we've gone through all of these items here. Now we're going to talk about IRS data. How can this help me? It says right here, using economics in your real estate investing strategy. How can this help me in my strategy, Chris? So let's come down here and take a look at some data. Now, I went through a dry run there, so bear with me. But we can see here that these immigration is the total number of people moving to a state as a share of the total number of movers. So if there's 1,000 people who move to a state and 100 people are from a different state, okay, then that's a 10% ratio. And what they did is they had this ratio and they identified what states have above the middle and what states are below the rate of 19.99%. So we can see here, because here's my thinking. This is what I was thinking when I set this up. Everybody is telling everybody on Bigger Pockets to move to one area, right? Or two areas. And everybody's like, well, okay, I'm just going to buy anywhere in these areas. Well, there's opportunities there, but there's also not opportunities if you know supply and demand dynamics. Okay. So what areas is everybody telling to go to? The Southeast. And we can see that it does say they have an increase in people from other states. Okay. Now I own a home here in Florida and I love it. I want more. It's difficult to find a deal there. And we're going to see why in just a minute, because I'm bringing in some other data. Because here's the thing, right? When you look at these and you have a strategy, you look at one data point, you have to always verify. And how do you verify? By other data points. Okay. That's how you do this when you look at your strategy and make sure it's working, especially from an economic perspective. So what I'm going to do is I'm going to bring in somebody who analyzed this. And his name is Lance Lambert. He's a great follow on Twitter. I highly suggest following Lance here. And he has a company called Resi Club. And what his business does is it looks at all these MSAs and he puts all of the information into maps. You guys know I'm a visual guy. So he takes all of the stuff and puts it into maps. And here's our map of the Southeast. What this map tells us is that the 10% here is in red, which means prices are declining. The 10% here is in blue, which means the prices are increasing. And when we come up to the map above, we see that all of these states have higher increases in immigration from other states, right? Well, when we come down here, we do see a lot of blue in the Southeast, but we also see a lot of red. And what I would look at if I was thinking about moving my investments to another area is where these red spots are hitting. South Carolina, in particular, is very interesting because there is a lot of red. What does that mean? What that means is when we look at a supply and demand curve, okay, it's one of two things that is happening. They overproduced supply, which means they anticipated this pricing point to go from here, 1, to here, 2, or which would put downward pressure on price, right? Because we would have the new price point here, which could be negative 10%, or it means that when we look at the supply and the demand, people are moving to South Carolina, but they're not moving to those locations that are red. So what's happening is the demand curve is actually shifting to the left towards 0, demand 2. Because now we have the price here, this was 23, and people are either moving away from those counties or they're not moving there as much as they should. And people might be moving within South Carolina, and it's putting downward pressure over here, which we would go from quantity 23 to quantity 24, and we can see that it has that negative 10%. Okay. So Chris, how can I use this in my strategy? Well, follow Lance Lambert. That would be step 1. Okay. Lance on X. Follow Resi Club, right? I guess 1A would be 1A, Resi Club on X. And 2, overlay your buy box with this data. Oh, DATA, not DAY, day, and see how it looks, because there are some opportunities. How about this one right there in Tennessee? Right now, here's the thing in Tennessee. What about this guy? Is that an opportunity? Could very well be. I'll tell you what, where we are, so in Lynchburg, which is right over here, we're growing pretty well. But the thing is that these people are moving from DC outward, which is pushing these people outward, which is eventually going to push these people outward. Where? Well, I mean, there's a lot of blue around this one guy right here. When it's these small clusters, I think that could possibly be something that would be interesting to look at. When it's these large clusters, I don't know what's going on there. I would have to review that. I do know one thing. People are doing it because there's investors everywhere. Personally, I would not look at Mississippi. I would not look at Louisiana. Some people are doing it, and that's fine. I probably wouldn't even look at Alabama because we can see right here. This is clearly the line of Georgia. Something's going on in Alabama. We don't know what it is. I don't know what it is. And that would be something that you would consider if you maybe had a business partner there or you knew somebody there, you could ask them about that. But in this video, I just wanted to go over a few economic things, show you some IRS data, show you the other data with Resi Club and Lance Lambert. Excuse me, I'm getting over a cold. And just show you some of the opportunities, right? When you take this data, yes, Bigger Pockets says buy here, right? They also say buy in Ohio and Indiana, but nobody's moving there. It's still appreciating and it's still cash flowing. So I would have to look at that data a whole different way. But in terms of the area that I am buying in and the area that a lot of people are saying to buy in, you need to still look at it. This is the one last thing, right? This would be the third thing that I would do on my list. I would break up the data continuously without being too analytical. So I would look at state data, then I would look at county data, and then I would look at city data or zip code data or something like that, right? That would be kind of my step. And that's where I would identify what is going on right here. Because now I know these counties, something's up, and what is it? Is it zoning laws? Is there employers there? Are there not employers there? Is where the migration coming from? Where can you get that information? You can get it from irs.gov. You can look up irs.gov has state to state immigration stats. Sorry, there we go. So you can find that information out and you can be able to review it. Now, here's the thing too. This is the last thing I would say. This is strictly for somebody who is looking to expand into another area if they're trying to find something, like a location. If you're fine in your area, like I like where I invest here in Lynchburg, and I like where I invest in Florida, which is down over here. Okay, I'm happy with that. Some people would not be. Some people would say, you know what, I'm just not doing very well in Lexington, Kentucky. So I want to go somewhere where there's more opportunity. Uh, I would probably look over here. Why? If I erase that, look at all these blues, right? There's something going on over there, and I don't know what it is. But if you were looking at data, you would be able to find that out. So guys, let me know. This is a longer video. I'm gonna go ahead and stop sharing here. Let me know if you guys like this video. It's a little bit longer, but I just talking to my investor friend yesterday about how understanding supply and demand can really assist you when you look at a market. I think that's valuable. And you guys know that I teach econ online and I train different people on how to evaluate markets. This is something that I think that you guys can really use in developing your strategy. So let me know if you guys have any questions, and I do appreciate you guys watching. Thanks.